A stronger euro, shifting trade alliances, and geopolitics are once again steering prices. So, what does it all mean for Euronext, Chicago, and global commodities? I'm Johanna Bota, and to break it all down for us, I'm joined by Bertrand Oesterle, VP of Clearing and Execution Sales at StoneX. Hi, Bert. Welcome.
Good morning.
So, euro-dollar at 120. How did we get here, and what's the impact on Euronext?
So for me to get you to why we're at 120, let me put the context in place first. So last week we spoke about the China-Canada trade deal. I told you that we had a India-Europe trade deal that needed to be signed. It has been signed on the 26th of January. Modi called it the biggest trade deal in India's history. And so it's a continuation of what we've been discussing for the past year, which is the world is looking at opportunities to create relationships outside of US dependency. And so Trump can't have it. So Trump came back with his tantrums, and we've had 3 tantrums over the past 3 days. So there's a US armada going to Iran. There is a risk that Trump will apply 100% tariff on Canadian goods if China and Canadians have a deal. So the deal is on, so that's it. So initially he said, well done, Carney, for having a deal with China. You should have one. And then once it's in there, he goes, oh, I don't like that idea of a deal. 100% tax, I'm thinking about it. And obviously the last one, in the mix of all this, Trump decided he's not happy with South Korea, and the tariffs on South Korea are going from 15% to 25%.
Okay.
So overall, what does it create? It creates an external market where investors are somehow losing confidence in the Trump policies. It's too volatile, it's too uncertain. And at the same time, investors are very well understanding that the Trump policy is a weak dollar policy. So that's how we get to a weaker dollar. So therefore, a stronger euro dollar, and the euro dollar on March CME made a peak just above the 120 mark yesterday, and it's still there so far today. So what does it mean for Euronext, or what does it mean for Chicago, or what does it mean for the specs? That's where it gets interesting. Normally, if you have a higher euro, that means Euronext should be under pressure. If you've got a weaker dollar, Chicago should benefit, because on the export market, your products are going to be either more expensive because of the currency or less expensive because of the currency. Now, what we've seen yesterday and today is very muted, in the sense that Chicago did not pick up as much as we thought it would do on a weaker dollar. So in a sense, soybean did, but wheat and corn started a touch high yesterday and fell again by the end of the day. And so far today, we're not seeing much movement. So a very muted reaction so far to that dollar movement on grains and oilseeds in dollar denominated contracts. And on the Euronext side, we've seen Euronext being pressured, but not straight away. So a stronger euro should mean a lower Euronext.
Right.
Yesterday morning, Euronext was still strong. And then in the afternoon, when North American participants came in, it started to fall a bit, but not by that much. And this morning, Paris wheat is again gaining a bit despite a stronger euro. So there is a feeling in the market that despite the stronger euro, Euronext is at a level where it is competitive, and especially the French merchants, sometime at the surprise of some Dutch merchants, are saying we're confident that we're going to be able to sell despite the stronger euro, because Euronext is already very low. So we're still in that stuck range, and we're currently at the bottom of that range, and people are saying we can't really go much lower. So that's the perception at present. Now the last bit, if you remember a few months ago, the Euronext specs, and especially the funds, were saying we're going to 120, we're going to 130, 140, 150. So that was their big battle cry, to say we're going to stay short in this market because the euro is going to go up, because the dollar is going to weaken on the Trump policies. Therefore, we can remain comfortably short in Paris wheat. So that was the battle cry for quite some time.
Yeah.
And then we've seen 2 months ago that short starting to reduce. So 2 months ago, the overall spec short was some 234.5 thousand short. Last week, I mentioned that it was 144.500 short. So we've lost about 90,000 lots. And it's going to be interesting to see the update from the COT from Euronext at 4 o'clock UK time today, and the one of next week, to see if the specs are looking at that euro-dollar opportunity to either stop their short covering
Yep.
or start to re-add to their short. So that's the element we're going to be attuned to over the next afternoon and next week.
Got it. So we've also heard some noise out of the EU about CBAM. Is this relevant, and what can you tell us about it?
So we talk about CBAM or CBAM very seldomly, but it basically is the border arrangement,
Yeah.
so a carbon border adjustment mechanism.
Yeah.
Now, why is it important? It's indirectly important. It puts some uncertainty from a regulatory point of view, from a cost point of view in Europe. So people who import urea, nitrogen, ammonia, if there's less CBAM charges, they will want to delay those imports.
Right.
So it creates that uncertainty. So we're being told by the market that there is a delay in imports of those fertilizers.
Right.
And what it means also, it means that those deliveries are going to be delayed as well to farmers. And where it becomes important to us is that it could become a bullish element if farmers get their fertilizers later and if they can't plant as much spring crops in Europe, or if the quality of the soil for the spring crops is not as expected. So that's where we're going to have to pay attention.
Okay. Another thing that you mentioned earlier was the deal between China and Canada. Obviously, China also has a tentative deal with the US. So tell me, what has China actually bought this week? Any soybeans? You don't have to start with soybeans. You can start with something else, but we're going to cover soybeans.
If you had your graph you wanted to put last week,
let's just pretend.
There'd be 0 on that graph. So
okay.
I have not seen...
it's a great visual.
Yeah. So I haven't seen firm confirmation of China buying soybean over the past week, but China has bought, and they bought 520,000 tons of Canadian canola since the deal has been signed with Carney.
Okay.
So it's quite a chunky amount of tonnage, and it puts back the anger of Trump saying, well, you're not buying US soybean, you're buying Canadian canola. What's going on? I'm going to have a go at Canada. Yeah. So the tantrum is explained. Now, when we look at whether China is going to go back to buying US or not, opinions are changing fast. And there's still people who think that Besant, having had a meeting with the Chinese premier, he's getting something out of it. He's going to get some commitment out of China for the 25 million tons from now to the end of 2026. Yep. So that's still a perception. But the market is saying that for the first half of this year, it would be unlikely that China will commit firm, simply because the Brazilians will be cheaper. So there's a tendency to think that China will most likely look at Brazilian supplies rather than US supplies in the next 4 or 5 months.
So it really feels like external politics or geopolitics are still leading prices. Any core fundamentals that are worth noting in soybean or corn?
So when we just mentioned that China-Brazilian relationship, the fundamental to watch is the Brazilian pace of harvest. So it's currently 5% harvested. We've mentioned it over the past 2 or 3 weeks. It gets harvested early. It means it gets exported early. But the market would agree with you. Over the past week or so, the fundamental news have been scarce, and it's mostly been about the geopoliticals. Now, if I come back to fundamentals, and if I get still closer to Brazil, the Argentinians are telling us that they've got a bit less worry. We had talk of dryness issues in various areas of Argentina, for example. There is hope of relief with some rain. And also, if we look at the US export progress of late, when we look at the soybean exports, they're now just 6% behind the pace required to get to the annual USDA target. If you remember, when we spoke about this over the past few weeks, we were minus 21%, minus 19%, minus 15%. We're now minus 6%. So there's been a great deal of progress to catch up with that figure, but it's still behind. And when we look at corn, it's currently 8% ahead of pace. And that's where it can become interesting, because the export are 8% ahead at a time when we're talking a lot about biofuel and corn to ethanol in the US. So when we look at the ethanol stocks in the US, they are rising. There's some 25.7 million barrels.
Mm-hmm.
Now, when those inventories are rising, it tends to indicate that the market is expecting demand. So we've got two sets of demand: external export demand and potentially internal demand. And I think that the internal demand is simply set from a political point of view because Trump is trying to hammer down to the lower house and to the Senate that E15 should be allowed all year through.
Yeah. Okay. And one last thing before we let you go, because I want to finish on wheat. What has happened with the extreme cold risk in the US and Russia?
So it's, I think, relevant to mention it and to review it. So last week we were talking of the risk of headlines on Russia and the US because of extreme cold.
Yep.
And it's always the same. I mean, wheat is a very hardy plant. It can sustain some cold. It all depends on how severe that cold is. So last week we were talking of headline risk and the market did go up a little bit on those headlines. But since then, the market has come to realize that the snow cover was generally quite sufficient.
Mm-hmm.
And so the damage is localized or minimal.
Okay.
So in that sense, it's taken some of that rally away from either Chicago or Paris wheat, for example. Now, when we look at Russia, there's been some data coming out of Sobekon. They've added some export potential for the old crop. So they're thinking 45.7 million tons compared to 44.6 previously. And for the next crop, they're talking of 39.6 million tons. And when we look at Europe, the European figures have been very misleading over the past year because there's a lot of incomplete data, but we're getting to 12.4 million tons of exports, which is very similar to last year. And that's where some of the Western Europeans are taking confidence, saying we must be ahead of that. It's the incomplete data that doesn't show the truth of us having an export pace which is decent. And that goes back to what I was saying earlier on, that perception that we can't go much lower because we're cheap enough to export. And when we look at the US are currently 7% ahead on their export pace compared to what the USDA target is. And to finish on the demand side, there's been little, but there's been some regular tenders from Tunisia, for example, which is looking for 100,000 tons of soft wheat and durum wheat.
Yep.
And the important one is the Moroccan potential tender. So
yep.
Morocco would be looking for more wheat for March shipment.
Mm-hmm.
And here it's very important because the French or Western Europeans are wanting to compete against the Argentine. And so the euro dollar is going to be making that difficult, but the price on Euronext is going to make that possible. So it's that duality.
Mm-hmm.
And those types of Moroccan tenders are even more important because they have to be timely. People have to get that business done because Morocco is getting better rains. And so their next crop is expected to be better. So their import requirements are likely to be less if that crop is realized.
Understood. Bert, thank you so much for your time. Now, we've had some very bad news here at StoneX, and I know that you want to say a few words. Mm-hmm. So I'm going to close out the segment and leave it with you.
Thank you.
Mm-hmm.
Well, unfortunately, our dear colleague Matthew passed last Sunday. He unfortunately lost his battle to cancer. So we wanted to pass on our support and condolences to his family, close friends, and to everyone who knew him in the industry. He will be dearly missed. And thank you for your support.